Hi guys, hope you're well. Welcome to another episode of Finance for Founders. As usual, where we cut through the noise and get straight to what it really takes to build a business. No fluff, no overhyped stories, just raw practical insights from people who have actually built, scaled, and exited business. Today, I have a guest who has done exactly that multiple times. Astan Morarji isn't just another entrepreneur. He's launched, grown, and sold companies across SEOs, legal tech, and compliance, turned around struggling businesses, and now invests and advises founders on how to actually win in business. But here's the thing, Aston doesn't do sugarcoating. If you're looking for feel good motivation, this isn't an episode for you. But if you want the real truth about scaling, exiting, and avoiding the biggest mistake founders make, then you're in the right place. In this episode, we're going to cover brutal truths of selling a business, why most founders fail at scaling, and the biggest BS in business advice today. And trust me, you won't want to miss Aston's no nonsense advice for early stage founders at the end of this episode. So buckle up, get ready for a masterclass in real business strategies, and let's dive into it. Aston, you're welcome to our podcast. How are you?
Thanks, Samuel. I think that was the best introduction I've ever heard. You get that reward. You get that award. That was fantastic. I think that is one of the most concise ways to summarize me. So I'm very happy to hear that. I feel like I found my home in the podcast world. So thank you for that. And yeah, it's a real pleasure. Thank you for being patient, for getting me onto your podcast. It's a pleasure to be here.
No, no, no. Honestly, your story is absolutely fantastic. And I can't wait for our audience to get a little bit more, to know a little bit more about you and for them to get your advice on scaling business because you are actually somebody that's done it multiple times. What we tend to do on our podcast, we first start off by doing some quick fire questions to our guest. And it's just for our audience to know a little bit more about them. So we're going to ask you about 10 questions, answer as quickly as you can within 2 seconds. We're trying to catch you off guard so that you give the most truthful response as possible without overthinking it. Yeah?
Okay, sounds good.
Okay. Number one, what's your morning routine?
Wake up and play with the kids.
Fantastic. Um, if you weren't in business, what would you be doing?
I'd like to say that I would have been a pilot. That was always my goal as a kid was to fly aircraft. So that's what I'd like to say. Whether I would have made it or not is a very different matter.
What's your guilty pleasure? TV shows or movies?
TV shows.
What's the latest one you're watching?
I'm watching Adolescence, which I don't know if you've heard about it, but it's quite raw. I'm not going to lie. So it's very emotional. And it's quite a tricky one to watch. So compared to some of the others, this one's quite intense.
Fantastic. Uh, Night owl or early bird?
Oh, early bird without question.
What time do you usually wake up?
It depends if my kids wake me up. Before kids, Samuel, I'd wake up at about 5. With children, it varies between 4 a.m. and 7 a.m.
Excellent. What's one thing people would be surprised to learn about you?
Probably how I met my wife. I was I got engaged and married in less than 6 weeks. From
Wow.
meeting my meeting my girlfriend. People don't know that. And it was the best thing I've ever done. It was my wife has been the biggest support in me. She's helped me get through so many difficult times. As a business owner, she's like my silent business partner. So yeah, most people don't know. That's a first actually probably putting it publicly that yeah, I married my girlfriend within a very short period of time.
Wow. I want to ask you a little bit more about that on the podcast, actually.
Sure. Sure.
uh, Favorite way to unwind after a long day?
In the spa. That's gonna sound like we do have a spa at home. That's a very privileged thing to say, but it's the truth.
Fantastic. What's your go-to travel destination?
That's good. A mix between Middle East and maybe Asia.
Okay.
Asia's more my go-to place. I
Where
like the cuisines.
specifically?
Thailand, Vietnam, Bali. I like that neck of the woods. It's a nice place for reprieve.
Fantastic. If you could constantly master any skill, what would it be?
What was that skill?
Any skill, what would it be?
Honestly, the skill I'd love to be able to master is patience. I'm a highly impatient person, and I think that impacts me more than just my professional capacity. That also impacts me personally. That would probably be the skill that I try to hone in on.
That's it. And what's a quote or mantra that you live by?
Mm. This is a great. I'm being honest here in the responses. Nobody should judge me. My mantra is never forget why you live. So don't forget the purpose of your life. And another one from a working perspective is do as little as you can to get as much as you can.
I love
That's
that.
a mantra. Yeah, I live.
Maximum efficiency. I like
Yeah,
that.
absolutely. Yeah.
And lastly, describe yourself in 3 words.
Honest, hardworking, kind. 3 words I'd use.
Fantastic. So, guys, here you have a little bit more about our guest. And I can certainly tell you from our conversations, he is certainly a very honest person, and I believe that you're going to get that in this podcast. Aston, tell us a little bit about how you met your missus. That's intriguing. I love to know
Yeah,
that.
yeah, yeah. Well, we met when I'd actually travelled to Budapest on holiday. Funny enough, and it's quite an interesting story because she was here, obviously coming back home, even though she was in London at the time. So, and I was in London working and coming here on holiday. And yeah, I would love to make it more glamorous than it was because we met when we were out in an evening, and there was, I believe in following what do you call it, a sixth sense or your gut instinct. There was an immediate connection I had with her, and we had an opportunity to bond quickly, given at where we were. So that's basically what it is. Literally over one evening, I got to meet her, and we stayed in touch, and we got to know each other very quickly, and yeah, it was the only time that I can truly say I felt like I fell in love, and it's where I stand still. Like I'm deeply in love with my wife. She's a great person, a great partner in my life, and yes, that's what happened.
I love that. Do you know, I find that every time we speak, right, you always prioritize your family. I'm taking the kids to school, I'm picking up the kids, my daughter's this, my wife.
Yeah.
What part does your family play in your business activities?
Yeah, I think that's a great question. I absolutely do prioritize them, and the truth is that that's because of what happened to me in the past. So to some extent, both my mother and father, more my father though, he's been in business since I can remember. My father's been in business, so he took the approach of it was more important to work hard and provide for the family that way than being an active part of family. So much so that I would say I didn't really have a father figure ever. So as a result of that and the impact it made on me, which was, frankly, very negative, I've had to deal with a lot of demons as a result of that. Um, I always said that if I was going to have kids, I would always make sure that they're going to be the priority, in my life. So I would actually say that my business and everything that I do, honestly, works around my family. So the question you ask is, how does the family impact the business? I would say it's the wrong way of asking the question. The question is, how does business get around my family? Because
I
that's
love
what
that.
comes first. And it's not hard, right, Samuel? Like it's not hard to be, I think, in my opinion, a hands-on father and husband. Your wife, your partner doesn't always demand attention off you 24 hours a day, but just to be able to spend the odd night just with her each week is a pleasure. Just to go for dinner and things like that. I don't think it's hard to prioritize those things and make sure that they work, that the businesses and the investments and everything else can work around them.
Fantastic. I love that. Absolutely love that. I'm a family man, married with 3 kids, and I can totally 100% relate to what you've just said.
Good for you,
Without
Sam. Yeah, I look up to you with 3 children, man. I'm stopping at two.
Listen, I can tell you we're certainly not doing any more than 3. I tell you that for free.
Fair enough.
Fantastic. So, Aston, tell us a little bit more about yourself and your background in business.
Sure. I think I've got quite a I say it's an elaborate history. It's probably quite a boring one to most people to listen to, but I'll try and say it succinctly. So, I think a relevant thing there was actually you raised my father because I think having a father who had actually had quite a sizable business, like, many, many millions, nationwide business actually, was that it was almost part of my thinking from what I can remember. I remember my father doing like his paperwork and administration at night. And I'd ask him and he was working on, for example, his daily operation sheets and then his working capital, things like that. So these sort of terms to me made sense when I was very young because I was actually genuinely interested in what he was doing. And the reason I preface that is because I chose to study law. I say I chose. I mean, I was more forced in a certain direction of what to study. So I studied law, and even though I'd studied law and I actually trained as a lawyer and I qualified as a lawyer, there was never any real fit for me. I never really enjoyed the profession. I didn't feel like it was right for me. It wasn't really appealing to my strengths either, for that matter. It was probably appealing more to my weaknesses. So after I'd been through all of that, that's when I realized I have two options here. I can continue to slog away trying to be a lawyer, or I can find better ways to basically sustain an existence, which was I could sell things to lawyers. Like that became my mantra almost at the time. And this was in 2014, 2015 that I made that decision. It was like, I'm going to sell stuff to lawyers rather than become a lawyer. And that gave rise to the agency that I had called LawPal. LawPal wasn't really meant to be a classic marketing agency. I think for the sake of the benefit of your listeners, most will have already probably been set up and running. So I won't go through like the, the 0 to 1, but in shortly we can go through the detail of how we went from, an easy 20 grand a month business that just started to a business that was at the time was doing about 250 grand a month when we sold that one. And there's a lot of interesting stories there. But from there, when I sold that agency, I had more cash than you get from a lottery win, and I was only 26. So you can imagine, was I responsible? No. Was I financially literate? Absolutely not. You would have hated it, Samuel, as a man of your stature, seeing what I was doing with money at that stage. You would have wanted to, throw something harder than a frisbee at me. That's a fact. So I wasn't great with money and investments. And then from then, I did get into, funnily enough, another business in the legal sector, which is actually in languages, because I moved to Hungary. And then I realized there's a massive gap in what we call like professional languages. Most Brits think languages is just kids learning languages. And then when you get to being fluent, it stops. And actually, when you leave England, you go to a place where English is not the first language, you realize there's a massive gap actually between those that claim to be fluent and those that need to use it on an absolute everyday basis. So like lawyers, tax advisors, all those sort of people here in Hungary, for example, have international clients. And frankly, the language level was to me quite surprising because it wasn't as good as I thought it would be. So I realized actually like, why are these guys not studying more? Why do they not have proofreading? Why do they not have editing? Why do they not have tools to make their language better? So that became actually a very natural flow, which became something called Native Legal, which I started when I came to Hungary. That business grew significantly. So that went from a business that was doing 50 grand a month up to the stage where it was doing 9 million a year. And that's a really interesting growth journey that we went on. I've had bits and bobs in between those, which quite frankly, there's probably a lot of learning in those failures, but we would need about a 9-hour podcast to go through all the other ones that didn't pan out going, so well. I sold Native Legal in we finally got out in 2023. So since then, I've been doing more of like a portfolio play. That is really going from, say, being the business owner more to just being the investor. I think that's also in line with the question you asked earlier, which is with the family. I didn't want to go and start something else from scratch or buy something big. I wanted to have something that was a bit more controllable whilst I raised the family and become more of an active family man. So I think that's the brief background. Of course, I'm happy to be led by you, how you want me to describe the growth journeys of LawPal and or the Native Group.
I love that. How long did it take you to scale each business? Sometimes when we speak about scaling a business, people tend to think it's a lifetime worth of work to have a business, scale it, and that almost becomes your life's journey. Whereas you look pretty young, and you have basically scaled two businesses and turned around another. We're going to speak about Mitigator later on, which is the company you actually bought, turned over, and resold again. So, how long did it take you for each one of those companies? Quite considerable amount of sales as well. Did it take you to actually scale those businesses?
Sure, that's a good question. So with LawPal, I would say we were I can't remember the exact date, but we were certainly into about the 18th month before we even had, well, I'd say notable growth. So it took at least 18 months to get to the stage where we were having notable growth, but that compounded. So from the 18th month for an extra year, we grew significantly. You're talking from a sum of 50 grand a month up to, so you're talking like 200 extra grand recurring every month we did in about a year's period. So then it only took 12 months to get that level of growth in, but it took us 18 months to actually finally get to that stage. It wasn't like it was 6 months in and we were just off the charts. That wasn't happening. And I like to share that because I think that I always call it like the pre-growth period or the pre-scale period. There's always part of every business's map that goes like, forecasts and projections that go down first before they come up. And I think everyone forgets that period. They expect it to be lit like almost straight and then we just go off we go off to the races. And that's just not true. It's not how you're going to grow a business. It needs a lot of investment on a foundational level before you grow. So that took around, say a year and a half to actually get to that level, but Native was much quicker. So I think that's because I'd learned that actually in a year and a half in LawPal, we wasted a lot of time. Something that I would say on the podcast, and I mean this from the bottom of my heart, is business owners are fantastic at wasting time. They are very good at being busy. They believe they have focus. And when I go in and I work like with my advisory clients now, they know that I'm almost contentious in my approach of you are not focused. I'll
Yeah.
say, you think you're busy, you think you're focusing, and you find some absolutely wacky way to justify your focus. And it's just not focus. It's not, ruthless execution against one common objective. And that's it. Everything else is just instantly pushed aside. It's an instant no. I'm not distracting my focus. And I think because I learned from Law Pal that when I started Native Group, I knew where I needed to go with this business. It was like, we're going to grow this business as quick as I can grow it. And it became almost an aggressive approach to growth. Growth can take a lifetime if you're not aggressive enough in your growth plans. It is that simple. Many business owners go, I'm growing slowly. And I say, so let's look at your plan of action and let's look at the speed and momentum and the way you're attacking your market. We all know what the answer is. It's not that you've got the right speed and you're going in with a ferocious mode and the organization is strongly aligned to hitting big goals. Never. It's never going to be that. It's going to be your business is barely aligned. It's barely got anyone in there. There's no structure. There's no ops. There's no common goals. There's no leadership. You can spot it all immediately. It's like that's why your business is not growing. So I think you just need to. We've spoken before about saying it's almost like an equation. It's a bit like a science and an art business
Yeah.
growth is. But there is an equation to it. There's things you just need to get right in order to get the growth to work. And if they don't work, you're not going to hit the growth levels quick enough. So Native grew in less than 2 years. There was a 24-month period when we were well over 5 million euros a year. Now that came because we bought and acquired language studios. So I don't know how many of your listeners will want to hear the story about acquisitions, but if you can acquire the right entities, you can go through significant growth quickly because you're effectively buying revenue and cash flow. And if you can make the right moves as a result of buying entities and bringing them together, which is what we did, that's how quickly it can happen. And when I said to you, one of my mantras are do as little as you can to get as much as you can, that's a very strong reflection of that approach.
Wow. And this is what you did with Mitigator, right?
No, Mitigator was effectively more of a turnaround. So Mitigator was a business I knew well, the owner, a great guy, role model to me, but effectively just didn't want to be involved in the business as much. So that was not going so well. So we had to find a way to effectively turn it around and get it back up and running. So that strategically learned a lot from what I've learned in the past, which of course I'm happy to go into. But there's a couple of things that I stand by with business growth. I think a lot of people think business growth is a volume basis. So I always hear this as like, it's about 10xing this and 10xing that. And I actually think it's more like of that equation. It's that base of going, if you're at €1 million a year or £1 million a year right now, and you do want to get to £5 million a year, it is that simple to look at the numbers. You all know this, Samuel, more than anyone. Look at the numbers and work backwards from your numbers. If they don't work, there is something wrong with your strategy and plan. It is that simple. If you say, when I look at 5 million and I do what I'm doing today, and there is no comprehensible or feasible way that we will get to 5 million, I go, well, it's not that the numbers are lying. The numbers are true. It's what you're doing today is not going to work for growth. So you have to find a new way to create, to forge the growth pathway. Just don't keep doing what you've been doing. Unfortunately, that's like a very common advice, which is growth is about doing the same thing, 10 times over. I actually don't agree with that. Growth is about finding the most viable way to make those numbers work. So yeah, happy to dig in as deep as you see fit on those.
Absolutely. So if you're scaling a business right now, right? So you've now started a new business. Talk me through the first 5 things you do, and maybe even the first month of setting up a new business that positions this business to scale at an incredible pace within the next 18 months to 2 years.
Okay. So this is me. I've effectively started a business and I want it to grow at a rapid pace over the next 2 years. The first thing I'd be doing right now is I wouldn't even be in the business unless it was in a market and industry that has a very strong underlying positive trend. There has to be something else more powerful than me that's going to elevate that market. So that's the first thing I'd say to you. I'm looking for markets that have a significant underlying growth trend. I'm not saying that you can't grow a business, just to be clear, if the market doesn't have that, but you're asking from my experience. My experience shows when you've got a positive trend that can sit underneath you, it will take you to places almost magically, almost invisibly. That's suddenly there's more demand. Suddenly there's more support for the business. So the first thing I'd be doing is make sure I'm targeting a market that has significant underlying growth trend behind it. Second thing I'd be then doing is finding the most leveraged growth model. So for me, leverage is what I really now care about. So it is not reliant on me to deliver the results and get the results. In fact, I do the opposite. What is the way that I can get the most results where it requires me as little as possible? And in turn, what requires other people as little as possible? So for example, right now, one of the underlying growth trends is in artificial intelligence. AI has baked in leverage without question. It has baked in leverage. So for example, that could be a market that I'd be then looking at. Then I'd be considering positioning. I think positioning is massive because I think too many business owners have this bad habit of looking at big numbers. Like, addressable markets. They'll go, I'm entering to a market and the addressable market is like, 2 billion. And that's not even big. I'd be like, that's insane. If you're just starting a business, you do not need to be going into a market that's addressable at 2 billion. You could be going in a market that's addressable at 20 million. Like that's the difference because you're not trying to get those numbers at the moment. You're trying to get into a growth journey. You don't need to be going after those size markets. Go smaller, and you'll find that those markets have lots of gaps, lots of potential, lots of growth. And it's a market that you can own. I think the markets generally and broadly have become way too competitive. You've got competition from people not doing anything, from genuine competitors, from technology. The vast majority of markets are super competitive. So I'm a big believer in finding your specialism, finding where you should actually sit. And that may be based on your experience. It might be based on where you have distribution. I think that's also very important, where you have a connection to a market. So we've got the strong underlying growth curve with leverage, which would be something like AI. I wouldn't then be going, okay, let's create an AI company that's going to deliver AI to every small business owner, because every small business owner is struggling. Like, that makes sense, right? But that's a terrible play. It'd be very much, for me, it might be going, I'm going to go and put AI into the leading law firms on the planet because I have direct connections to all of them and I could own that space. So I think they would be the three core moves that I'd make. Maybe if there was a four, if I was looking for, like strong growth, I would be looking at a model that would be able to support me getting to 10 million quickly. So I don't believe in models that can get to 10 million quickly if you're selling something for £99 a month. That to me immediately says to me, you're going to have several roadblocks and hurdles to get there. For some reason, there's this mantra of go cheap first. And I think that's because of the mainstream BS advice out there, which is do everything for free, do it really cheap, get loads of people in. That's the way. I vehemently disagree with that approach. For most things that you sell, if you're not a commodity, you are better off finding better paying, higher paying clients and getting your price tag as high as possible to get in with those clients. So if I wanted to see the growth curve, I'd want to be going at a premium pricing level as well. So I'd be looking at my model that can support that. My ability to find 50 clients paying 10 grand a month. Someone said that to me. I'd say that's easy. That's not me trying to sound big-headed. It's from my experience. I go, that is easy. If you said to me you've got to find 5,000, I'd go, that gets tricky. Finding 5,000 paying clients means you've got to find 50,000 prospects. How on earth are you going to do that in today's world? How quickly is that going to be? How expensive is that going to be? That's just absurd. So for me, the model I'd be looking at is going after a higher price point. So a specialism at a higher price point, solving very known challenges and pain points in a market that's growing and is supported by an underlying growth curve. Those to me are the things you need in order to go from day 1 to month 24 and see significant growth. Of course, you can apply that to circumstances differently depending on the business type.
I'm blown away by your knowledge. Absolutely
Thanks, man.
blown away. Um, right now, you spoke about growing markets. What would you say are the three growing markets? If you were to advise someone to start a business, what would those markets be?
I think it's tricky because if I don't do the advisory on starting anymore. And the truth is because I found that quite a difficult area to own, mainly because we all know business is a game. So the more you've played the game, the more realistic you become. Whereas I found when if I was advising someone new, they'd often be firstly looking at their passions. Like that's a very common. I'm really passionate about this. And I'd be like, I don't really care. Like markets don't care whether you're passionate about anything. So I wouldn't be doing that. But I get the point of your question. Which are the ones that I would say are the growing? Without question, artificial intelligence would be the number one right now. I see that being such a big disruptor. I see investments being made in the US that nobody even in the UK can see. When people say things like humanoids won't be real, I'm like, no, humanoids are real. Trust me, today they're real. I know it. They are real. They are being trained in factories with software to do things that you think will never be replaced. We will always need plumbers. We'll always need care homes. We'll always need nurses. Yeah. I think that it's by far the most disruptive. Yeah, that is the most disruptive piece of technology is coming through is going to be through artificial intelligence because you've got such a double whammy of knowledge-based industries being removed by the software as well as physical jobs being removed by virtue of the build of these things. So for me, artificial intelligence right now would be the strongest without, frankly, any question. And when you look at market potential, that's the biggest. So I don't even think I'd look at all three. I wouldn't even consider looking at other markets right now. If you're new to business and you have the ability and the desire, I'd be looking at anything that can either enable others to adopt and implement AI or actually building something in AI yourself. But obviously you need a lot of money to make that happen. So it's more the funded startups, that are making that stuff happen.
That's amazing. You mentioned that it's easy to, sell £10,000 product to 50 people or so. How would you're starting a business today, what would be your marketing strategy? How do you go out, your marketing, your sales strategy? How would you position yourself to go out there?
Sure, that's a great question. So, if you're looking at, say, a client that's paying you 10 grand a month, no matter what you offer, right? My response to you is if you're looking at 10 grand a month, you've got to be delivering significant amount of value. Okay, so 10 grand a month is not going to be something where you deliver £500 worth of value. That probably doesn't really make any sense in terms of the bargain. Even if the thing is worth £500, they've got to feel like they're getting more than 10 grand. They're not going to spend 10 grand a month for the sake of it, right? So normally what we're talking that's upmarket or upper market or premium market strategies, right? It's about them getting enough value. I would say to you, and this is going to answer your question, which is my response to you is actually most traditional marketing doesn't work, in my opinion, at that level. Because what you do need is trust. People say trust and authority. I would say if you want to sell something for 10 grand a month, the thing you need to focus more on is the trust than the authority. Because normally when you have the trust, the authority is implicit. Nobody would trust somebody who they believe that knows nothing. Right, that's my opinion in business. So I think people focus too much on authority, thought leadership, and thought leadership articles and all that stuff. The reality is, if somebody doesn't know you from John on stage and they think you sound like a bit of an idiot, chances are you're not going to be winning business off them. The guy that goes on stage and actually is there to build relationships, wow, the audience to build relationships is the one that's going to win because they've got a trust-based focus. So my short answer to you, without me going off on one which I really could do, would be your marketing strategy should be one based on building, generating, and retaining trust with the market. That means you've got to know who you're selling to. So the other thing you need to do if you're selling, say, a 10 grand a pop and you're looking for 50 clients is don't go after big, broad markets. You have to go specialist. You have to find your little part in the market, call it niching down, even though I hate that term. That is what you're doing. You'll have to nail it down and go to a smaller segment that you know has buyers that are willing to spend at that level. There's nobody going really small when you know that there's no buyers there that can even justify spending 10 grand a month on something. The final point is that thing you deliver has to have that level of value. So I have guys that they'll say to me, how do I do that when I sell like a really basic piece of tech? And my answer is, well, you don't. Like strategically, it's not going to work. You sell a commoditized piece of tech. This is another diary management platform. So you can use Calendly or another 4,000 different options of Calendly. This guy's coming in. He's going to be the 4,002nd tool for diary management, but he wants to charge 10 grand a month. I'd say your strategy that's not going to work, right? The thing you've got to deliver is not giving more than 10 grand a month worth of value to that market. And it's also highly commoditized. You're not doing anything to help them at all. If you go into an organization and say, I will guarantee to optimize every single worker's time by 25%. In terms of productivity and efficiency, that value to an organization might be more than 10 grand a month. It's a completely different play. It's not a technology tool. This is now almost a service delivery, probably backed by technology, backed by AI. But think about those big outcomes and big results. So at that level, when you're selling something for 10 grand a month and the value you're looking at, I feel like you've got to solve those big problems. You can't go in and try and solve really basic problems and expect to be paid 10 grand a month. Unfortunately, I am biased where I say I've seen this work very successfully for myself. And I've seen it work generally successfully in many other markets. The more specialist you are and the more premium you can attract higher paying clients. They're easier to work with, that stick with you and they trust you. And they will overspend for the premium of the value you've got to bring. Or you can go nice and low market, charge £99 a month to people that are really difficult. They don't appreciate what you do. They churn really easily and you are constantly firefighting. We're talking about growth here. The hardest thing for businesses to growth is to extrapolate revenue. It's that simple. How do you go from 1 million in a year to 10 million a year? Well, you need to somehow find an extra 9 million a year. Do you think you get that from £99 a month clients easily on a lean bootstrap model? I don't buy it. It's really, really hard. It's a reason why lean bootstrapped tech tools for £99 a month really struggle to get to 10 million a year. It's because they're just highly commoditized. They can't make those numbers work. But those sitting at the premium market, they can. They can make those numbers work. And you've seen it, I'm sure, Samuel, in your line of work as well.
Awesome, awesome, awesome. We also spoke about you getting into businesses. You've worked for businesses, and what they think is scaling is not actually scaling. They end up wasting a lot of time, right? What are some of the things you've seen? What do they spend their time on doing? And ultimately, what should they be doing based after you've had a consultation or you've observed them and said, nah, you've put your energy into the wrong place?
Sure. I think the first most obvious thing is normally just, like I said, the plan of action. It's this idea that they think they're going to go from position A to get to position Z, sometimes doing the same thing they've been doing, or whatever it is, whatever the detail is. You have to pressure test that. You don't need to pressure test that from me. You can pressure test it from your CFO, for example, or your accountant, or somebody else. Samuel, you'll be able to look at that and look at numbers and a plan and just go, "Are you sure? Like, that assumption doesn't really make sense, and you're being very presumptuous there. Are you sure that you need to pressure test that plan?" So I think that's the first thing, is that not enough leaders, owners, call yourselves what you want to call yourselves, are actually spending time there, because there's all this belief of it's all about the hustle and it's all about just doing, it's all about execution. I think 0 to 1, that is true. 0 to 1, generally in the journey, it is about just get out there and start doing and iterate and hope it lands and see where it lands. But when you want to grow, you have to get out of that mode. It can't just be like, well, I'm just going to keep winging it and hoping it's going to pay off. You should have a plan of action that actually makes sense and is viable. So that's the first thing I say, is not enough time spent on that plan. And you see that because when a business owner then goes, should I make, like, I've got to make a decision. Who do I hire out of this person or that person? Say different roles, similar salaries, can only hire one person. To me, the answer to that question goes, what's your plan of action? You already have your answer. Well, give me your plan of action. You should know who you're hiring out of those two people. And if you needed both, your plan was still flawed because you don't have enough money to hire both of them. You see, all this comes down to, like, did you actually have a good strategy and a solid plan of action? And the answer is often no. It's like, oh, I didn't even think about a plan of action. Well, I thought I'd work it out as I am now. So I think there's not enough attention and focus is put in the growth plan. It's like, how are you actually going to get to where you need to get to? And you don't need to go to town in the writing. It's almost like the brainstorming element. That's what's not done enough. You don't need to produce a 100-page business plan. Nobody wants to read those things. But you do need to think it through with the people closest to you, your mentors, your advisors, again, your accountants, anybody else that you can rope into that conversation to go, I want to go from 1 million a year to 10 million a year. This is my plan of action. Now go through it with me and tell me whether you think it actually makes sense. Because then you should know. So then this goes on to the next thing, like, where do you waste time? Operationally, there's so much dead time, it frustrates me, right? And that's because we just don't have enough people moving the needle, as I say. Maybe that's down to the quality of the talent. I can't dispute that. Are you actually any good at hiring good people and bringing them in? My experience shows it's often not really the talent. It's normally just down to leadership and management. You've not done a good enough job to get the most out of your people quickly. Right, you've done it. You've hired somebody who supposedly is great, and you think, well, I'll bring him in, I'll just leave him, and he can just work it out as he goes along. And that's very common for founders, because 0 to 1 was them doing exactly that. So
Yeah.
then they're in this mindset of going, well, I did it, you can do it. And it's like, no, no, no. Like, you can't grow a business with that expectation. You've got to level up your own leadership style now. You've got to somehow bring this guy in and get the most out of him. That comes down to things like organizational alignment and organizational behavior. These are terms that a lot of business owners trying to grow don't even think about. They don't even want to consider that. Like, no, that guy should be working. I pay him well, so he should deliver results. And I can also then ask things like, so what's the North Star metrics? What are we driving towards here? How does that person know that they're the goals that they should be hitting? He should just know. Like, what do you mean you should just know? Like, you don't raise that with him. How do you target him? How is his performance based on the aligned performance of the company overall? All these things don't, like, I find that they're just not covered. So I'd say the second point here is this leveling up you have to go through as a founder. From being the hustling founder, you can still be a founder, but you've got to be more of a leader. Right, a leader of people. And I see that that's a lot of wasted time, because, like, you're not getting enough out of your people, and that's a big part of leverage and delegation as you grow your business. Finally, I think there's a big waste in application of resources, particularly money. So when I'm growing my businesses, we had one goal: grow the top line number and marginalize it. So it wasn't growth at all costs, it was growth at a cost. We knew the cost, and we knew we weren't going to go ahead of that cost. I think one of the most, Nikolai, I can't remember his surname, the guy that is the founder of Revolut, he's now become a very big public figure and has managed to build a ginormous unicorn. And his style, I think, he's so public about it, which is, he's like, everyone is tracked and measured on numbers. He's like, everyone in Revolut globally is tracked on numbers. And I love it, because people wonder how you can get a business like Revolut that actually organizationally somehow works, culturally works. They fought every norm to make Revolut happen. They were one of the first to do it. And he always says it's because we just had numbers. We've always been attracted to growth. We know where we need to get to, and everything could be pointed to numbers. So everyone always knew where they were at, and there were no excuses to be made in order to hit growth. I talked at the beginning about aggression. It's almost this mode that you need to go into. That if you don't hit that mode, you will waste, because you'll find that people spend half of their day doing things that they're not moving the needle whatsoever. It's not contributing top line whatsoever. It's a complete waste. But is it their fault? No, it's your fault. You're a crap leader. That's why they have no idea where they should be allocating their time or not. So I think I see that slippage and that wastage there. There's lots of other nuances, I'm sure you can imagine, Samuel, depending on the type of business. But I mean, they're the common areas I see as to why they're going to struggle and where all that slippage is happening. And I think that a lot of that just comes down to, like I say, ruthless focus. Right? If you have a plan of action that makes sense, you then align your organization to go towards that big goal, right? Everything should be aligned on that. So everyone knows where they stand, what direction they're moving in, how quickly, what they should be doing, what they should not be doing. You shouldn't be having that level of slippage. Of course, you can then build in things like culture and everything else on top of that. But if you can make those things work, you become more numbers driven. And I think maybe the challenge I give to the listeners right now is I say to them, do you actually want to grow a business? Because I find a lot of owners, what they say is they go, I want to grow a business mainly out of ego. It's like, I don't want to be a small business, which I find kind of funny, because it's like, actually, you've already fought the odds if you have a small, successful business. You have my respect because you've done what is, I know, tremendously difficult. The 0 to 1 is by far the hardest part of the journey. But then the question you've got to ask them is, do you actually want to go through the growth journey? Because the thing I can say, I would say I've probably spoken to at least 200 business owners in the last 8 years who have surpassed, say, at least 5 million, right? That's an estimate, as everyone can probably tell. But I mean, I'm standing by it. Nobody will say they did that by accident. Nobody. That honestly, nobody says that. They don't go, yeah, we just kept winging it and hoped it worked, and wow, look where we are. Nobody says that. It is always a founder who became a leader and said, no, we targeted growth. Everything became about growth. Everything became about numbers. So we align everything around the numbers and the plan and the strategy and everything else. So that's the question you've got to ask yourself right now if you're not at that level, which is, do you want to get to that level? You can't wing it. And generally speaking, you're probably not going to defy the odds and not do all the things you don't want to do. Right? Like, you don't want to be aggressive. You don't want to become a leader. I hear this all the time, but I just want to be a small business owner that has time with my family. I'm like, all good. Good for you. But don't expect to go from 1 to 10 million in 2 years if that's your plan of action. Your plan of action is actually you want to take it easy and slow. Then you're going to get easy and slow growth as a result. So I think that's something that a lot of owners, if you're listening to, you've got to ask yourself honestly, like where you actually want to get to. And then you've got to commit and double down in whichever direction you choose.
I am, I am, I am blown away. Um, in a normal day at Lawpal, right? You spoke about important to build trust, right? Even above expertise, because trust in itself can be found. Nobody's going to trust you if you don't have a level of expertise, right? Um, how did you go around doing that? So talk us through a normal working day in one of your businesses, what you perpetually and consistently did to build trust and to also scale your business as well.
Yeah, I think that's a great question. I think the first thing I'd say is trust. The ability to build and generate and retain trust has changed over the years. It was so much easier back in the day than it is today. Partly that's because of, I would say, the digital world / social media has given rise to, let's face it, our attention spans have dropped and we are generally all becoming a lot more skeptical, right? Everyone has something to sell. It's that kind of motive we're in. So I would say today it is significantly harder to build trust than it was 10 years ago, in my opinion. When we had Lawpal, trust building was all done in person. And actually, funny enough, that's what I'd advise someone to do now. I'd be going, if you can, you should be seeking to build trust in person rather than relying on digital methods. There's always ways you can seed, like trying to build trust, for example, on LinkedIn. But I think it's tremendously hard to build trust with a really serious decision maker and sell to them without actually getting to know them on a more personal one-to-one level. So my advice is always, the thing you look at is you have to find ways to open doors and get to know them on a human, personal, one-to-one level. So at Lawpal, for example, I was in London. So my goal was always, I went direct to everyone that was responsible for marketing because I could identify them. Remember what I said earlier, Not enough people grow with an intentional plan, so they don't actually know who the hell they're selling to. I knew exactly who I was selling to. I could pick them out from the website and go, that's the person I'm selling to. And I got to know that type of profile. What was their background, what their motivations were, what their KPIs were. Like, I really knew who I was selling to, right? So I could reach out to them. My goal then was, how can I open this door? So even today, cold outreach does work if you can make it work. We opened the door initially, it was always cold, but it was cold through relevance and personalization. It wasn't cold through spammy tactic. So for example, one of the things we'd always do is send them detailed reports on, this is your current SEO status, which you could do today, frankly, on websites. This is 2016, so it was very different. So we could send them something that was very relevant, slightly mind-blowing, like, wow, we didn't realize we sucked that much at SEO in our firm. And these are the things we could do. This is where we'd get you to. This is how much it could cost you. Would you be interested in having the conversation? That became very transactional almost in nature, but it almost always opened doors. People weren't willing to just be like, oh, just ignore that. That's spam. I don't want to talk to the guy. It would almost always open the door, and then I would actually get out of sales mode. So then it would be like, I've opened the door, now I need to build the trust. I'm not going to build the trust trying to sell to this person immediately. So the first thing was, can we meet? It was always, can we find time to meet? And to be honest, in 2016, people in law firms, they have a lot of spare time to meet. So it was never hard to get people to get out of their office and meet you in a cafe locally or something and have a drink. My approach then was always 29 minutes of talking about them and their life, 1 minute talking about business, because that's the way that you build trust with somebody. You don't try and sell something, you get to know them better on an individual and personal level. So that's when we had it on a one-to-one level. So I think that that actually became the system. We had over 50 clients at LawPal. Everyone was pretty, well, I say everyone, 47, 46, 47 were landed using that sequence of events. Open the door cold with some loads of value, personalization and relevance, get them into a personal meeting and nurture as if they're a human being. Like as if they are just somebody that I've met that I want to get to know better. So I don't need to go into these ridiculous sales modes. These sales gurus say that you need to ask this question in a certain way, use this particular word, never use this word. I think it's nonsense. It's like they're a human being. It's not hard. It shouldn't be hard for you to build a relationship with another human being. Just forget the fact you're in business for a moment and just try and build a relationship personally. For example, we were both in London. So there was always common talking points about London. You know this, Samuel. You're a London guy too. You know London well, right? So like, where do you live? I used to live in Clapham, close to where your roots, Samuel. So you'd be like, oh, have you been to this latest bar or this place in Clapham and all that sort of stuff? There's always things you talk about, but they start to remember you that way. And that's how you start to build the trust. You've got to get out of the whole like business mode at that time. And I see a lot of sales guys doing that wrong nowadays still. It's like, it's all about selling. It's like, you're not going to build trust if all you're going to do is try and go and sell. The second thing is, if you are going to sell, lead with insights. I don't think you need to lead necessarily with loads of value. Maybe that's an overused term. So you don't need to give everything away for free, but I think you need to be insightful. You need to raise a spark in the mind of the person for them to go, it's almost like a story. It's like you've opened a story up in my mind. I want to learn more about this. If you can close that story loop, you'll find that's a good way of building trust with somebody. So there's like certain ways you can do it. I think today though, Samuel, like, so for example, if I was building a business today, interesting one. When we were doing the last business, we actually created events. So I realized it was actually harder to open doors. So rather than forcing the doors open, I created almost the medium for the doors to be made open, you see? So we started holding events. So we started getting our target market and some decision makers together in a room with no intent to sell them, but just so we could get them in a room. Because if we could get them in a room and we were the one putting on the event, it gave me the opportunity to get to know them better. So I could build the relationship from there. I don't have any simple tricks and hacks, as I'm sure you understand, and I don't stand for that. There is not a known way you can hack your way to building trust with somebody. It's very much relevant on your background, your market you're in, who you're trying to build trust with, how distant you are with them. If you ask me to build trust with the royal family, it's going to be hard, Samuel. You know, I don't have a cheat book. You know, I'm not going to send them an email say, this is how you should run your country. Do you want to meet? It's not going to work, right? So it's like, you've got to be realistic about it. But there's no shortcuts to doing it. But I do think the thing everyone forgets is it is more about being personal and human. You've got to find a way to build a level on a one-to-one personal way. And I think we've lost that. With AI coming in, everything's becoming automated and digital. I encourage you all, you should know who you're selling to. Go out there and get closer to them on a one-to-one basis. And if you can't, find a way to get them together on a one-to-one basis. That's a real great leverage trick to building trust with people, because you're the man in the room. You see, when you put a room on and you bring 50 people together, the only person that's elevated across those 50 people is you, because you were the one that put it on. It's a really nice way of being like socially and almost psychologically higher than everyone else. But you've got to do something like that to build trust. But I certainly empathize though, because I don't think it's also easy, and it's certainly not quick. Do not expect someone to trust you from nowhere overnight.
Yeah.
Rarely going to happen.
Yeah. Wow. That is absolutely fantastic insights. And I hope to our audience that they're really, really catching on to some of these practical tips. I think my next question here is you go into a business. What is your first 5 hires? What is your first 5 hires? And there's a spin-off to this question. So I'll wait for you to answer it. Then I've got another question I'm going to follow up with that.
Coughed when you asked the first bit. So you said, I've got a new business. So that's what you said. Who are my first 5
Yes.
hires? Yeah. My first response is, I'm not hiring anyone. I'm not hiring anyone until I have the biggest pain, and when I go to bed, I can't sleep because I've got so much to do and I need that much support. That's my answer to you first. People hire way too quickly in business, in my opinion, right? And secondly, I would say to you, it's going to be highly dependent on your circumstances. I would always, the first 5 hires would be the executioners or the doers, without question. I would never hire someone senior, right? That's the thing I'd say to you, especially we're talking early stage. So if you're talking growth period, it's very different. But early stage, I've just started a business. My first 5 hires are going to be people that get stuff done that I know need to get done on a highly optimized way. So it's about getting results delivered. I'm not talking about anything strategic. I'm not talking about accountants. I don't care about my numbers. These are early days, right? That's what I would say. When it comes to the growth phase, though, that's different because you see, you should have a growth plan. And strategically speaking, you are likely going to need more expertise on a higher level to make that work. So I absolutely am all for fractional CFOs or really good accountants supporting you on numbers. There's a lot of businesses that don't get the numbers when it comes to growth. I think that's really important. You need someone to really pressure test numbers with you. But I'm going off piece here. Your question was when I start. That's my answer. I don't also believe that there are set roles. I absolutely don't believe in that. It's always going to be dependent on your business. The reason why I say don't hire is because it should be painful enough where it's painfully obvious enough who you need to hire. Because unless that you're doing that job and it's that bloody important, excuse the language, that you can't now sleep and it's bugging you, you know it's an important role that needs to get fulfilled. So at that stage, I'd go, that's your first hire you're going to be making. I don't think I don't believe in following any cliche advice, which is it's the integrator or the vision, like you're the visionary, it's a hire integrator and all that nonsense. Like, no, I firmly am dead set against that. I say this because I've seen a lot of people rush into hiring, and I think it is by far one of the most critical mistakes you can make at an early stage is rushing into hiring and bringing the wrong people at the wrong time.
Wow. So my follow-up question is this. When we had a conversation, you've mentioned to me that some advice and some of the things that really irks you is people giving advice that have never actually done it themselves. One of the most common advices we hear is your business is at the mercy of your hire. If you can hire the best talent, then your business has a good chance of scaling. I've had the privilege of having a conversation with you, and you are so against that, right? So it'll be good to hear your perspective on why
Yeah.
you're so against that.
Sure. I think that, look, that cliche advice comes from a good but dead obvious place. Okay? So you are that swamped that you can't get anything done. So as a result, you need to hire people. That's where I would go, yeah. Like, what an obvious statement to make. Like, we can get that. Like, if you have that much on and that you need people, and if you don't have those people, it doesn't get done, then the obvious, and I'm putting in air quotes if you're only listening to this, the obvious answer is you must hire new people. And thus, if you hire new people, more gets done. And you can't grow a business as you're getting more done. Like, I mean, I don't dispute that there's logic there in that. The bit that I dispute is this idea that you have to find the best people and bring them in early stage. And that's the critical thing to growth. In other words, the greatest people are the reason why businesses grow. I don't agree with that, right? Firstly, I think if you actually did a study on this, you'd realize businesses that grow, the owners would certainly say, like, we didn't get the best of the best in the business at the time, right? And this is the critical part. It's because no, there's no such thing as an 18 player. I will die on that hill, and I will never adjust my opinion of that because we have all seen it where someone could be an 18 player in one organization and an absolute failure in another organization. That has been, like, let's face it, that must be factually proven. We must all know people that do that. They fly in one place and they absolutely suck in another, right? That's another thing. So I don't believe that it is the case that you have to hire the best people and bring them in, and therefore that is the only thing that enables your business to grow. And I mean, there's also like really obvious things, which is like some businesses need to grow. We're talking about the growth plan. They don't need that many people to grow. Like look at e-commerce businesses, Samuel. Like, you telling me you need the best of the best to pack orders? That may sound really derogatory, but it's true. But no, like, you need the guy that's like just committed. So when it's -8 outside and it's snowing, he will still get to the factory. He doesn't need to be an 18 player, but he probably needs to be motivated. He probably needs to be somebody that like you trust, and you've really found a way to align that guy to the goals. So when it's -8 and it's snowing outside, he will get to the factory warehouse and pack the orders and send them. It doesn't make him 18, does it, for Christ's sake, you know? So I just think it's way too cliche. Even in my line of work, which is almost always been dependent on people, I would not say it's always been the case that the growth has only happened because we can hire the right people and bring them in. I think what's more important that's ignored is effectively organizational. Like, I call it organizational performance. It's your job as the leader to get your entire organization to work towards common goals well and properly. That's hard. That's a big tricky thing that most owners don't get right. And you'll find that organizations that just fly, and you look at the people and you look at them and you go, you got 15 staff members. You won't be like, every single one of those is 18. They're just all alone, doing all their job by themselves. Total lie. Well, you're nodding along because you know it. It's like you go into your client's office, you'd be like, no, they work because organizationally, you are running a incredible, exceptional organization from the top. You know, everyone knows what they're doing. They know where they fit in with the culture. You hire according to all of that. You know, like it's like an engine. It's an engine that works, that propels the company forward. But it is not to do with just hiring the best people. It's so cliche. Hire the best people, step out of the way, let them do the job. I don't know where that came from, but I will die on the hill that that is complete rubbish,
Yeah.
garbage.
Yeah.
Unless it's you and one other person, like a co-founder or a co-partner. Of course, I get that. They're probably going to be running their own business anyway. It's just you two, like, half doing it together. You know, like, I get that element. But anything after that, firmly disagree with it. It's just not how you get the best out of people. Samuel, you got people in your team, and I'm sure you'd agree with me. Your ability to lead it and organizationally make it work is what gets the most out of them. It's not the case you just gone out and found the best of the best and brought them in and then gone, I'll just do nothing and stay quiet whilst you guys do all of your jobs together. It's just nonsense.
Yeah. Yeah. You know, one of the reasons I resonate with you, we have a CFO firm, or we have an accounting practice as well. And as the company has scaled, I've increasingly found myself more of a business person than an accountant now. And one of the things that you've said, just to our audience, so we can give some clarity, is that every single person is responsible for something, right? So, for example, if you're hiring a salesperson, and if your salesperson is not aware of how many sales they're supposed to make a week, what the conversion rate should be per week, and at the end of the week, everyone comes to the table and gives an account of what they've done. So one of the ways that you actually motivate your team is the fact that they are now responsible and accountable for certain metrics, which drives them into action, because they're going to have to give some account of what they've done in the week to those people. But what we find is that some people that are in business, they don't spend enough time focusing on that, and everybody just seems to do what they want. And then one of the things you also mentioned was being intentional, right? So if you're saying that this year you want to do a turnover, you want to turn over 2 million, right? Break it down. How much is each one of your products, right? Or your services that you're providing? Over a 12-month period, what does that look like over a month? How many sales must be made a month? How many sales must be made a week? And then people are now held accountable and responsible for some of those metrics. Do you want to expand on that a bit, Aston?
Yeah, I love it. I mean, I think you've succinctly explained what I said earlier, so it's bang on right. And I agree with you, it's a big problem because I think, again, it comes from the 0 to 1 phase where you don't need to do that. It's just survive, right? Like, try and find ways to survive and hope it works. And then that growing up you go through personally as a leader, people forget to do that. They're still in that wing it, hope it works mode. I think I can give you a very good example here, right? So with Law Pal, we were at about, it was around 150 grand a month, right? And I thought to myself, I wanted to grow. So the question then became, I wanted to double. Why? Probably because it's the easiest number to find, right? Like, I think sometimes we're a bit ridiculous as business owners about the growth numbers we come up with because you go, it just kind of sounds nice
Yeah.
mentally rather than actually, is there any logic to that number? But anyway, so double was the number we went for. And at the time, when I worked out those numbers and I worked backwards, it came to me that actually, for us to get all these new clients to hit those numbers was almost unfeasible. Because the number of clients we were already talking with, so in other words, should say prospects, number of prospects we were talking with, so we had closed active clients, we had a few closed churn clients, so chances are they weren't coming back. Then we had quite a big pool of prospects, and then we also had quite a big pool of people saying no. And they may say no because they go, we don't have the budget, we have our own in-house providers. They, rarely they had an external agency, if I'm being honest with you, but it was a no. Yeah, a no could become a yes, but let's face it, like the no was pretty hard at the time as a hard no. I share this because what happened was for us to get the number from 150 grand recurring a month to 300, it was not feasible now for us to continue with the plan that we had. Because it was like, how are we going to find these firms? So then we had to, looking at the numbers, you see, so looking at numbers, we then said, okay, do we go lower market? Do we get the smaller law firms and do a price at 1 grand a month? Right? But then the reality is those numbers were insane. It was like, crikey, we're going to have another 100 clients in the books. They're going to be more difficult to deal with at a grand a month price point. It was even more than that, actually, we were working out. But, the point is that we had to look at the plan and change the plan of action as a result of the numbers. And I think that that's what you're trying to say here. You've got to have those numbers in mind and then look about how you're going to change the plan and how you're going to execute. For us, what I actually said was, I said, if a client is paying us 10 grand a month, my goal was now to make them spend 20 grand a month. And that was the easiest flick. Bing. As soon as I did that, it was, okay, so why is the client now going to spend 20 grand a month with us and not 10 grand? One option was we just hike our pricing out of nowhere. Probably not a great strategy. We didn't try it. I'm glad we didn't. Probably would have backfired, right? But the other thing was like, how much more value could we bring to their table? And that's what we did. So the step one was me and a couple of other guys went in with the better firms that we knew, like, the ones we were very close with, and said to them, look, we want to get these relationships into a higher value. We need to for the sake of the business. Transparent to them. But it's like, we know you're not going to pay twice for no reason. So why are you going to pay 20 grand a month? And the ones we were close with started telling us, well, truth is, we're trying to do email newsletters and they suck. Our printed media sucks. We don't have a design team, so we're trying to wing it on bear in mind Canva wasn't even that big back in the day. So it was like, they weren't really doing anything even half decent on Canva. So it's like, they don't know half these things. And then they're doing some paid stuff, didn't know how to do paid stuff. Their guys are talking on stage, the partners are, and yet their presentations look awful beyond belief. So all these things they had from a marketing point of view they need to support with. So then the penny dropped, which was like, I tell you what we'll do is we'll start to expand into those areas and effectively get more out of the existing client relationships. That made the numbers add up. So then we could work from there and go, operationally, what do we need? Financially, do I need to borrow money or do we have enough to sustain? What's the plan of attack on every client that we have at the moment? How are we going to open the doors to have this conversation? Who are we now going to hire? All of that started to make more sense because we'd made the numbers work. Going back to your point, Samuel, I think owners almost do it the wrong way around. They go, I love this plan. My plan is amazing. So I'm just going to go with this plan and the numbers will work. And I'll say to you, no. That's the big failure point. Your numbers are very unlikely just going to randomly work just because you like your plan. You're better off looking at the numbers and working back from the numbers and then go, the plan's not going to work. It means we have to change the plan. Just change the way that we're actually going to hit those numbers. So LawPal did grow. And the reality is I remember vividly because we took on like 3 or 4 new clients in a year. That was it. Because all we did was effectively upsold our existing clients. But you can imagine when we went to sell LawPal, we were a highly acquirable target. We had 60 odd clients, each spending on average, the average, bear in mind, because we had to split it overall, was nearly 9 grand a month, marginalizing at about 40%. Like, it was a very nice business. It made it very attractive for a purchase because those numbers were like solid, And
Yeah.
that didn't mean that we had to go and land shed load more new clients. It actually meant we had to make the numbers work. So I just want to share that because I think it's very relevant to the thing the point you just made.
Absolutely. And just to our audience as well, when you upsell to your existing clients, you actually cut out what we know as CAC, and that's the cost of acquisition, of customer acquisition, that is. And so basically, you don't have to really spend too much on advertising, which is where a lot of these company put a large sum of their budget towards, like advertising for new clients. But what that simply means, and a lot of this is cheap, is you just upsell to your existing clients. It cuts out a lot of waste. It ensures that you scale without having to invest too much money into the business. And this is why it's one of the most critical ways in which you can scale a business, is to actually upsell to existing clients. And I love that strategy.
Yeah, well, what is your retention revenue plan, right? That's
Yeah,
what I say to people. What are you doing with the retained clients? Don't talk about new ones. That's
yeah,
actually easy. Oh, just spending on paid ads
yeah,
and
it is.
LinkedIn organic and ghostwriting.
Yeah,
Yeah, I don't really care about any of that now. Tell me what you're doing with the existing ones. Yeah,
yeah,
because they're there for the taking. And
yeah,
often you've built up the goodwill and trust with them. So you're
yeah,
trying to build it up with all these other guys. You've got 50 clients that
yeah,
would be willing to spend a lot more. And the best thing is you can literally ask them, Samuel. I think it's genius because like
yeah,
just
yeah,
go and ask them, hey, want to double the rates? What do we need to do to double the rates? And your clients will tell you, like, will you actually solve these 5 other things for me, and we're game to double rates? How many business owners don't do that? I think is worrying on a
yeah,
growth perspective. It is all just about new clients. Weird. That's all I can say. It's a weird way of just targeting growth because I've always done that. It's focused on retained revenue rather than just trying to constantly acquire new clients. And I think that goes to the heart of the strategy, which is if you're not going after cheap, you don't have to keep doing that.
yeah,
You do if you go after cheap because
yeah,
eventually it's a churn. They're not going to spend 99 a month and then spend 10 grand a month. That's
yeah,
not happening.
yeah, yeah, yeah. I love that. You spoke about the acquisitions of your companies. You've had two companies you've sold on, and you've had another company which you've turned around, which I'm going to ask you some information about that. I actually had a somebody that um like a mentor, someone I can speak to who sold his company for 100 million, right?
Nice.
You don't really share, but sorry, side note, you don't really share how much you sold your businesses for.
No, it's more just it's more because I don't. It's not out of really privacy. It's just more I just don't like to see it as a brag factor. But Law Power sold for 3 million cash. So it
Wow.
was an all cash deal that I got for 3 million quid, which I think was a relatively fair deal, even though it had a lot of potential. There's a reason why I sold it, which I'm happy to share if you want me to, but it wasn't a great story.
Go ahead.
Native Legal sold for 12 million euros upfront plus deferment. So we had effectively a performance related. Oh, it's not an earn out. It wasn't an earn out. The business was exceptionally healthy. So all it had to do was continue on its tracks. We had to retain a certain number of people. So there was a little bit of concern from the buyer. But let's put it this way, that went extremely successfully. And I was very lucky. If someone asked me what my biggest luck was, Samuel, it was selling native. Because I tell you this much, AI will destroy 99% of value from the native business. So I sold and got all the value pretty much at the luckiest time I could have done. Because if we'd kept on to the business or we were still going through it now, it would be struggling, tell you that much, because there's just nowhere near the same amount of demand for the service because you've got AI doing 80% of it now. Just side note. But yeah, so they're the two bigger ones. I've sold other things for smaller, but you know, they're not nominal sums, but they're not those sums. They're much smaller. When effectively they've been at losses anyway.
And what about Mitigator? You bought it for how
Mitigator
much
was
and you
it,
turned it around?
no, Mitigator only had a low seven-figure value. That wasn't a big one. That's only just been sold, and those like unfortunately, not unfortunately. I mean, it's privy for 5 years. From 5 years from April, that is the information is confidential. But I'd say it's not a huge sum of money. The value was good. The valuation was decent on the business. It wasn't a huge sum of money. That was it was effectively a turnaround. So it was having to take something that wasn't working. I was trying to get the most out of it. It was also probably not like I think we got the turnaround, but we never truly hit the growth mode on that business, to be honest with you.
Fantastic. I mean, that is a general. And in all of these companies, what was your ownership?
Sorry, excuse me. I'm dealing with my virus with my kids. Law Palette owned 100%. So I was
Wow.
the only owner. In Native Group, I wasn't. So interesting, because we did a roll-ups, we bought language studios. Part of the vision and the sale was that those that owned their existing studio could get a little bit of the holding company. So they understood my big goal. And there's a story I love to share. If you don't mind sharing it, it's
Go
relevant to
ahead,
this. So let me just
please.
answer the question first, and I'll tell you the story, which is so in the end, when I sold Native, I actually only had 46% at the time of selling it. I made sure that I had enough controlling power. I didn't let them get voting shares, frankly. But in the end, because you've got to remember, we bought 12 studios. So there was enough equity we had to dish out in order to get those 12 studio owners to effectively stop working for themselves and inadvertently come under the Native umbrella, right? So that's why I had to lose the equity. But it wasn't to investors or anyone else. It was to those that we'd basically acquired, and we gave them as a cherry on top was very much the holding equity in the holding company. But the story I want to say is relevant to this is I'm a huge believer in whatever you want to call it, which is uncontrollable luck in business. Whether you're religious and you put that down to God or anything, I don't mind. Like, personally, I just say there are many things that when you start doing stuff, you will find that momentum can lead to results in the weirdest ways. And my best story of luck relates to Native and the exit, which was there was a guy with his family on holiday in Budapest, and he was in the cafe, and I was next to him. And I was on a video call with my very small team because Native Legal started with just us in Hungary and a couple of lawyers in England doing the work. So before we did any roll ups or anything, and I was on a video call. When I got off it, this guy, this Italian guy next to me, goes to me, "Are you the guy like just running this Native Legal?" And I said, "Yeah." I thought it was weird. I was like, "Yeah, why?" And then he introduced me, and he happened to be the guy that was effectively the family man of a ginormous family office that owns the biggest language studio in the world.
Wow.
And he was next to me in a cafe.
So he
Which was
knew of
just,
native legal.
sorry?
He had heard of native legal, so yeah.
Exactly. He'd seen Native Legal, like he'd heard us because I think because we took two very big law firms in Hungary that I think that one of his subsidiaries were suppliers. I think something must have kind of like, God, who are these guys doing it? But I think he heard me on the call mentioning Native Legal. It's because it was like a little team call that I was doing. So I think it just connected. And he was just like, "Oh, like is that you? Are you?" Because he was like, "I know you're here in Hungary." So we had a really nice chat, and he was very open. And he said to me like, "This is a guy that's worth billions. Like the family fund is worth billions, right?" And I didn't know it at the time. And he said to me, he was like, "So what's the goal?" Because he's like, "I hope you don't mind sharing." And I'm very open in business. I believe good markets have enough room for competition. So I said to him, I was like, "Right now, there's no way I'm going to slog away and do this." I said, "I've decided I'm going to go and roll up the studios. So I'm going to go and take all those little studios in different cities and effectively become European wide." That was my goal. Because if you become European wide, you can land the big European law firms that then spend a shed load with you because you're now servicing all of their satellite offices, right? So that was my strategy at the time to grow. And he said to me, he was like, "You know what, if you do that, I'll buy your business off you." He's like, "As a smart player, I'll buy the business." And at the time, I was like, okay, I took him seriously enough. He wasn't messing around. He was an older chap, clearly talking to me in a very, I would say, mundane tone, almost like too honest. Like, "If you do that, I'll buy your business from you." And I said, "Okay." But he said, in the meantime, stay in touch. He left me his business card. So I always did. I just stayed in touch with him pretty much every month. "How's business going?" I told him, like, we did our first acquisition. So then he was like, "Oh, you're actually being serious about this?" Like, yeah, I'm going to make this happen. So in the end, when we started doing more roll-ups, I actually said to him, I was like, "I want to know whether you're being serious." I said, "Because I'm planning to have kids." I was like, "I need to know whether this is a business I'm going to keep growing or whether you truly meant you're going to buy it off me." And he was dead serious. He said, "No, I'm going to be the buyer now of this business from you guys." And the reason why I share that story is partly about luck. But when I was having to sell, when people say to me, "How did you get all these small language studio owners to buy into your story?" I always share that story. I said, because unlike many others, I could actually go to these guys and say, "I literally have a buyer. Yeah, you will only hold you will hold 4% equity in this business, but unlike anyone else, I already have a buyer for this group." You see, so as a studio owner, I had a really powerful carrot to get them to buy into the holdings group. And sorry, because there's a very long answer to how much equity did I have, but I just want to explain that's why we made that work so well. It was exceptional. I don't want everyone to think it's actually that easy to acquire small businesses, roll them up and sell it. That's actually not easy, but it is the biggest stroke of luck I think I could ever have had. Was this guy was actually sitting next to me and was absolutely bland as day, ready to be like, "Yeah, if you make that work," because he knew it was a smart strategy. Nobody had done it. So he's like, "Well, he's probably writing me off going, you're not going to make that happen." And lo and behold, I managed to make it happen. And one of his subsidiaries, effectively, of the massive fund that they have, bought the business
Wow.
off us.
Just for clarity and even for myself, when you say language studios, explain that to us
Sure.
that are
So professional language studios normally mix. It's normally most of it's training. That's what most language studios do. They do language training to lawyers, accountants, tax advisors in countries where English is not the first language. So they do that by almost by learning. See it as learning. But the big part of our work was editing and proofreading. So you got to remember this was pre-AI. It's why AI was so disrupted to this model, because AI can do this for you now without question. But before it couldn't. So you would have like Grammarly, but Grammarly does not understand case law. It doesn't understand Latin doctrines and everything else. It doesn't understand constitutional laws of Hungary. Grammarly does not get that bit at all. So when we were dealing with lawyers, and the reason why this worked is because I came to Hungary and I had a tax advisor, a financial advisor, a lawyer, and a couple of others. Because, I was worth arguably quite a lot of money. I had money in the UK Do I bring it here? There was loads of questions I had, and I wanted to settle here, which was like, how do I settle? And that's when it clicked to me. I thought, God, these lawyers, I'm paying this lawyer a lot of money. I tell you this much, I was paying this lawyer more than I pay in London for a lawyer in Hungary. And this guy was struggling to uphold a conversation with me. And then one of the things he did was bought property for me, and they're writing the contracts out. And I just thought, God, some of this English is bad. Like, it may sound offensive, but it just wasn't good. And that's how native started, was by me asking them, where do you actually learn? Like, how do you get your English from fluent, where you could hold a conversation in a pub or a bar or in a cinema, to you can perform your job as a lawyer using the English language? And the answer was like, well, actually, we don't really. We kind of use these odd studios, but they're drafting contracts, 100-page contracts for big international clients, and the English is atrocious. I kid you not. A contract where you'd expect the English to be, where your job as a lawyer when you're drafting is to make your English as succinct and clear as possible. These guys are drafting and it's absolutely dreadful. So a lot of the proofreading, editing, there was a lot of value there because we could take their work and finesse it and sometimes make it right. That's what we were doing. So yeah, but
Fantastic.
now AI does it all for you. So
Fantastic.
that's great.
My next question. So, remember I said that I had well, I still have someone that sold his business for like 100 million. And so he advised me, he said, what advice would you give me to scale business? And he said, if I can productize what I have, right? And then he also mentioned acquisitions. Like if you want to scale fast, acquisitions. Um, and somebody that I listened to, Alex Hormozy, has a very similar approach as well in acquisitions in order to scale, right? So talk us through how you scale, how you get into an ecosystem where you get people to buy from you, how you position yourself to get into buying other businesses. And I've also heard of, people acquiring other companies without actually putting down any money. And, basing it based on their balance sheets, assets that they have in order to buy those properties. So if you can explain that and your
Sure,
and your journey through that for us.
sure. So you're not wrong to say that you could grow your business significantly by buying other businesses, and normally that comes through something synergistic. So the easiest one example is a competitor. So I run a marketing agency, for example, and then for me to grow, I just go and buy competing marketing agencies, because what I'm really doing is I'm buying the revenue. Think of it that way. I'm buying immediately and quickly all of that revenue that competitor is earning, and I'm bringing it into my book. So that's what you're doing, which is why if you did it 10 times over in 6 weeks, you can imagine your growth, well, God knows how much, but it would be more than effectively 7x your growth in your own top line to get there. So that's the premise of it all. Now, I think the tricky thing is that if you're going to do that, you need to have a plan of like an acquisition strategy, which is strategically why you're acquiring, right? Which then leads to a plan of action, which leads to your other question, which is like how you raise your own profile. Because I think people think it's really easy. I think they think, oh, if I go out there and say I'm a business buyer, everyone's going to be, flying to me and saying to me, buy my business, buy my business. And actually, like, it's weird because it generally doesn't happen. What you'll find is businesses that are super acquirable get acquired without you even ever seeing or hearing about them. The ones that are like really hot targets. Many go to brokers and listing agents, and actually you'll find their success rate is abysmal, all things considered. If they were being honest about their data, there's some research done on the data of brokers, and many of the honest brokers would say, like, they're not selling 100 businesses a week. They're lucky they're selling one a week. So, the businesses that go to the brokers or the agents aren't great. So you might think, oh, I'll just pop to a broker and say, hey, broker, do you have any other marketing agencies? Trust me, that's quite flawed. It generally won't work. They're probably not going to have loads of great marketing agencies for you to buy easily. So then it becomes like deal origination. That's the trick to buying in business. It's how much can you create your own deal flow that's aside from where it sits with agents or your mates or anyone, the person down the bar or the pub or anywhere else. I think that's the trick to making acquisitions work. And that's almost like a whole new strategic game that you're playing. Which is why if you want to look to acquire grow through acquisitions, yes, theoretically, it is a fast lever. Like, it's a lever which enables fast growth, but it is almost like an entire new strategy, which means you need a lot of effectively resources to make that happen in yourself. In other words, you need a lot of time, you need a lot of energy and effort and money for you to make that work. In yourself as the leader to go, I'm going to go out there and start acquiring other businesses, which is why I think it's actually generally not very successful. For me, in the native group, I literally said the only way I'm growing native was through acquisitions. So you say to me, as Samuel says to Aston, tell me about your marketing campaigns. I'll go, there was none. Tell me about your biz dev guy. There was none. Tell me about your sales guy. There was none, Samuel. The answer was there was nothing. The only way I was growing native was through acquisitions. And I feel like that's the only way you make it work because it almost becomes, like I say, a strategy on its own. As the leader of the business, you go, I'm only focusing on acquiring other companies and bringing them in. Are there exceptions to that rule? Yeah. But, factually speaking, if someone says, oh, Aston's lying, I've bought 20 businesses and still led my business, I'd be like, I'd put them to proof and say, I'd love to see that in reality because I've not seen it happen where someone's been able to acquire very effectively without that being almost like a standalone strategy, which is why you find guys will grow groups at that level. So in other words, the guy like your mentor, the past, he gets 100 million, he looks to go and acquire because it's like, well, he's either exited or his business is already killing it. He's already 100 million. So he doesn't need to be in the weeds. He's not really leading. He's already got his own executive team. He could then focus and go, using this great business I've built to 9 figures, I'm going to go out there and try and buy other businesses, whether that's horizontal growth or vertical growth. That's what you find. But in the small business world, you generally don't find that. My other pushback is you've got to find good targets. So your ability to find a business, let's say you're going to grow and you're going to find 10 small businesses, each doing $1 million in top line. You may assume that that's easy. And I chuckle because I'm like, that is tremendously difficult. Most businesses that are doing $1 million a year are just winging it. They are not good acquisition targets. They're completely owner dependent. The owner does everything. The revenue is unpredictable, uncertain. The business is operationally run like a nightmare. So it's not easy to go and buy those small businesses and bring them under the hood. So I think part of that answers your question. I'm going off on one, and I'm hoping there's some value there for the listeners just to be conscious because it does work, but it's not easy to work, and it's almost like a standalone strategy that you need to follow. Talking about the no money down deal. So you can absolutely buy another business, A, without using your own money, and B, potentially for nothing. Those businesses that sell for nothing, my response is always quite simple, right? That seller of that business has had to justify selling his business for nothing. So chances are it's not an absolute rocket ship that's been sold, right? Like chances are you've bought a ticking time bomb, something with tons of liabilities, lawsuits and all that stuff. And yes, people do lie. There is due diligence, but when you've got nothing to lose, a seller will lie to get rid of the business to you because they've really got nothing to lose to make it
Yeah.
happen. There are guys that have talked factually and publicly about failed acquisitions that is normally down to the seller just winging it to get rid of this horrible business. Classic, if it's too good to be true, it probably isn't true. Like it's probably not good. Now you can though leverage finance, something that I'm sure you know well, Samuel, and probably your CFO line of business helps your clients with, which is can they leverage money from banks, for example, to effectively do a leveraged buyout? That is possible, but again, I would stress, does that happen on really small businesses? I would say generally speaking, it doesn't.
No.
So again, if you're doing it, it's like why I keep saying if you're going to go down acquisitions, it has to be something you double. It's like you double down and you commit because then you start looking at much bigger targets. You'll find that guys can leverage buy out a company that's doing 10 million a year. And it's like, how much did you risk? And the owner goes, actually, to be honest, like I may have given a guarantee and I've done very other serious things, but the reality is we didn't have to use a lot of our cash to make it happen. I call those like big moves, like big player moves. Like it is possible to do it, but my advice to you is you don't even consider that unless you're willing to double down and commit to the strategy. Don't be one of those people who goes, yeah, I'm going to do this and then kind of do it on the side and hope
Yeah.
it works. Now, it's just not going to work. Like lenders aren't going to take you seriously enough either for you to actually borrow that money somehow and back it all up. So I think that's the only thing I'd say. So is it possible? Yes. But even if you're intrigued about getting into acquisitions and your only motivation is because you think you can buy it for no money down, I can almost guarantee you're the wrong person to be in acquisitions. The people that succeed in acquisitions are value driven. So it's like it doesn't actually necessarily matter what they pay on day one because they already know that on day 700 they're going to make bank. Like they're thinking in a
Yeah.
completely, you know what I mean, like different level.
Yeah. Yeah. Wow. Um, we had a conversation. If you, I think you have like another 10 minutes or so, right?
Yeah, sure.
We had a conversation, and you said that scaling a business, like you did with Lawpol, and compared to what you did with Mitigator, where you actually came in, switched it around, and resold, that was a lot more difficult than low power. Now, for those of us that are listening, his first two companies he scaled from scratch. And then the second one, he kind of bought into the company, turned it around, and then resold. And so in our conversation prior to this, he said, not that he regrets doing it, but he wouldn't do that again, right? So if you can explain to us why, and you were quite adamant that you're not going to do it again.
Yeah, I think I'm not afraid to admit that I would never ever do a turnaround again. Um, Here's why. It's nothing to do with the business that I was involved in. So like I say, the prior owner of that business is a great guy. He's like a role model to me. Like I built a great friendship with him. It's got nothing to do with what he did or the business before anything. It's around, in my opinion, on the principle of turnarounds, which is A, getting the deal flow on turnaround is really hard, like very tricky. If you think deal origination is hard buying a business, deal origination in turnaround is like 50 times more difficult. It's like getting good deal flow of turnarounds really hard. The bigger reason is this. Most turnarounds become they're effectively too late. And that's normally because the leadership have been willing to leave it too late. I think, funny enough, Samuel, you'll know this more than me, given the work that you do with your clients, either as a CFO or as an accountant, which is you look at the numbers and you go, blah, this is not looking great, guys. Like, you need to start doing things. And it's then that you'd be saying to them, maybe you should have a chat with a few others and see if there's somebody you can bring in to turn this around. And your clients go, turn around? I'm not turning around. Like, we're not dead. I'll wait till we're in the ground and then I'll classify myself as a turnaround. And that's what I found is the big problem. Turnaround, that's why the deal flow is a big problem, is because most owners / leaders are not willing to get the help at the right time when you are actually a turnaround case.
Yeah.
Whereas credit to the person that let me involved in the business, he was cognizant. He didn't really want to carry it on. It wasn't going the right direction. So he may as well get me involved at that time. That was right. That was the right timing to bring someone in. But most owners / execs, they just can't do that, which is why so many businesses end up failing, because they could be turned around and rescued, but they wouldn't. And that's why I think makes it really hard. But above all, there's so much baggage, Samuel. Like, people say starting a business is hard. And I'm like, yeah, like acquiring arguably is quicker. But even when you acquire, you are taking on baggage classically. You're taking on things that you don't even know. You're not even in control of. Like, all those invisible, intangible things that become a pain in your backside. You don't know yet until you're in there and you go, oh, crikey. Whereas when you start from scratch, at least the baggage is your own. It's like, it's self-created baggage. So you can blame Samuel in his business. Samuel can blame himself for the baggage he's created. But I kind of feel that better. Like, it's almost like accountability.
Yeah.
It's like, well, here's your own baggage. So deal with it, Samuel, and stop moaning. Whereas when you do the turnaround, it's like, crikey, I didn't cause that problem. Like, the client's threatening to sue me. I had one guy threatening to sue us on trademark infringement for a favicon, like for an icon on the site. A trademark infringement. It was like, what? Like, I didn't know this was coming. It's just things like that. You just find like they're so stressful and frustrating to deal with because you don't even see it. It's like you can't even DD that out really. And that's just like a minute thing. I'm talking people, massive issue when you do turnarounds. Like, you can imagine culturally and I talked about organizational performance. Organizational performance is at its worst during a turnaround and rescue. So if you think about the importance of organizational performance, it's so tricky to get that to go around. And I think that's also why the turnaround industry is actually quite small. I didn't know how small the turnaround industry was until I got into it. And I looked around and went, wow, there's barely anyone doing it. My head was like, maybe there's an opportunity. And I learned very quickly, there's a reason why not many people are doing turnarounds.
Fantastic. Do you have any mentors, books you read, people you look up to as a source of inspiration?
Yeah, I think my answer was before I did. And I think it's really important. Like, some people say to me, like, what are the shortcuts to what I've managed to achieve? And I also like, one is having the right people around you. There's always that classic thing, like your reflection of the people you're closest with, which I generally believe is true. But in a business sense, it's like, I think you need to have some people that you can rely on. It doesn't need to be so official, like a board of advisors or anything ridiculous like that. Most of us don't even have boards at that level, right? But it does need to be people that you respect and trust, that you can bounce ideas, get second opinions. They can call you out when you're going off in the wrong direction. I almost say, like, small businesses would do better with a chairman, if you think about it, like somebody that has a vested interest but also is happy to call shots and pull strings and be like, that's looking odd and that's looking wrong and why are we doing that? And you go like, you need that character. And I had that throughout all of my journey. I've had advisors, I've had mentors, I've been willing to pay for sure to have the right people there. My latest set was a guy that built a 400 million pound group. I mean, I was very public. I said I was paying him 15 grand a month to advise me. And that was like one call a week if I was lucky. But honestly, in that call, the amount of times he actually told me no, and the amount of times he basically told me I was losing my mind, like, why on earth are you doing that? Why are you focusing there? Why are you not doing it? Was like all those things saved me so much. It was a premium I was willing to pay to not allow me to go down that route. So I think advisors, mentors, call them what you want. But the critical thing is they've got to have done what you're looking to achieve. I don't know why so many people get like, I don't know why people seem to even match the logic of, I have a mentor and he failed in business. He did one business and he failed. He's man, I'm just like, it's not to sound big-headed, but I just don't get it. I'm like, so what are you getting out of that relationship? He didn't get to what you're getting, and you don't need to go necessarily find even a founder. It's like Samuel, probably, I don't know, but I'm sure in your line of business, you do provide, it's not just numbers, right? Like you're providing advice and you're almost mentoring your clients through like decisions them. Like you didn't have to build a business massive for me to be like your accountant matters or your like your scale up your outsourced CFO or fractional CFO matters because they've done things that you've not done. So like if I was looking about between me and you, who's going to assess financial DD quicker? I'd be like, I'm not even trying. I'll give it to Samuel. I'll sit in the corner there. Samuel can do it. Because it's like, no matter how good I've built businesses, you know numbers way better than I bloody well know them. So I'm not even going to attempt to look at it. I'd be like, Samuel does it. Oh, I'm not doing it. But yet in the business world, for some reason, people seek out mentors, advisors. It's like, he's not done it. He failed. And yet you have this person advising you on the way. To me, I just don't get it. And it's never made sense. I'm almost like, just read, like you said, read books then. Go to sources where they have done it and get it indirectly. We are not lacking in content. That's a fact. Qualifying the content and doing your diligence on content is important, but we are not lacking in decent content if you can find it. Find it from that source instead. But yeah, I've absolutely had it. And I think books, like you talked about Alex Hormozy, I have a very torn opinion on Alex Hormozy. I know he is legit, and his past stuff I thought was brilliant. I used to watch Alex Hormozy 4 years ago, and he was incredible. Like, you talk about value bombs, he would drop so many value bombs. I think he's become mainstream, so that
Yeah,
requires a
yeah.
change in approach. But he is the most, I think, frankly, the most legit out of all of them. At least the stuff he puts out there is normally rooted in something logical. But something he says about books, which I think is great, is he's like, he reads a couple of books and he just digests them. Right? Like, that's the main thing. It's like he gets into a book and he will really start to nail it line by line and really get into the book and understand it. I would generally endorse that approach. I wouldn't just read to brag about about the number of books that you've read. It's about what you do with the book once you've read it. So be more careful about what you're consuming. For me, I like consuming stuff about psychology as a side note. Business owners do not do enough in understanding other human beings. There's a huge part of psychology to business. A massive part of it that many people don't want to face up to. So I read a lot about human psychology, not actually about business.
I love that. I have a very huge interest in psychology. A l-
You have a huge interest in books, Samuel. We can see behind you. Which is your favorite? Do you have one that you go to or one that you swear by?
Um, no, not really. Not really, to be honest, because anything I say would be some of the books out there that have been well publicized. So not really. I think that I don't take knowledge from one particular book, but once I find a nugget, I double down on it.
Hmm.
So it's not really about the author, so to say, or
Yeah,
gravitating toward
yeah.
towards one book in particular. Well, maybe it's an idea. So, for example, in this meeting, you have thrown a lot of nuggets, and I am going to double down on it, right? But if someone said to me, "Who's my favorite um, business person?" I may not necessarily say Aston is my everything, but I would say that Aston has nuggets that I've literally doubled down on, and it's really helped my business. So
Nice.
yeah. So yeah, it's not really anybody
I like
like
that.
that, so to say. But no,
Yeah.
I think it's important that you spoke about having a chairman and having people that you paid on a monthly basis, and just having people in that you can call on and get some ideas on, and you know that's pretty much how I run my business. I tell you the truth, right? This podcast was an opportunity for me to showcase some business stories to our audience, but can I be honest with you, it's largely been an opportunity for me to network and for me to learn. Be very honest with you. And so what I've basically done is, since I'm learning, the rest of you come and listen to my conversations that I've had.
We talked earlier about how you build trust, Samuel. That's what I'm
Yeah,
saying. You got to be smart about it. Like, you know, the reality is you've been asking me to come on a pod, and one of the things I do is look at previous guests, look at your background, and then we get on the call and we've had 2 chats and we feel like we've known each other for years now.
yeah,
So the next time you
yeah,
message me and go, "Can I have a favor?" You know, I'll be like, "No, sort off,
yeah.
Samuel." I'm joking. I'll be like, "I'm not your favorite business owner, so get stuffed." No, I'll be, you know, of course it'd be like, yeah, you know, without question. And you do need to be quite savvy about that. I think
Yeah,
again, when I talked about the international intentionality of growing a business, I just think sometimes too many guys are just winging it and expecting it to grow. It's like, no, be more intentional, be more strategic and tactical about what you're going to do in order to hit certain goals. You've got to do it. And you running a pod, knowing it helps your listeners, but also gets you to network and learn,
yeah,
fair play. That's
yeah,
exactly what I do.
yeah,
I didn't used to go out for breakfast meetings with guys just because I like breakfast. It'd be like, no, I want to win more business, you know. And it should have been clear enough as well. It was like, it was mutual, you know.
yeah,
I'm not here because you're forcing me to be here. And I feel like, crikey, what a boring conversation this been. And I want to
yeah,
close the MacBook.
yeah,
It feels mutual, you know.
yeah,
There's a mutuality to it. So
yeah.
yeah, I think it's good you share it, but I get it completely.
And I'll be honest with you, such is my interest. At no point in our conversation now have I looked at premeditated questions or anything else like that. Like, literally, I did, and this is why the kind of conversation has flown, because wherever you've left off, I've picked up from. I said, okay, right,
Nice.
let's dig into that a little bit more.
Yeah, absolutely.
Simply
You
out
said to
of
me,
interest.
you said you were going to send, yeah, just to be clear to the audience, you said you were going to send questions, you never did. And it's fine, like, because I didn't mind. I just said, just so we had some guy. And you're like, no, I'm just going to ask you some quick fire questions as we get into it. But it is, and it's a good sign of a good conversation. I hope that people have been able to follow it. And I would say, Samuel, like anyone who knows you or your clients, you know, anyone wants to have a chat, I would much prefer you to have a chat with me. With all due respect, don't think time is not always free, but I'd much prefer you to say to me that you want to have a quick chat and answer. Can you, for me, just to be clear, if you have some questions, I'm happy to answer them. Don't go and listen to people that've never done it. If it helps that I can answer questions, then fire me across questions. We'll promote this across LinkedIn. People can connect with me there, and
Yeah,
I'm happy to help them and any of your audience or your clients for that matter.
absolutely. I appreciate that. And the last thing I would say, ask you as well, just for our audience, is what are some of the myths out there about business that you would like to burst? Um,
God,
uh, some of the myths that you would like to
where do I
correct.
start?
That you would like to correct.
Yeah, crikey. Where do I start? I think this is where I'm going to go off on an absolute rant, probably. Look, first thing I'd say is there's loads of myths about building a business. And I think that's because, again, of the world we live in today. It's good to make clickbaity content and stuff that, you know, is so controversial and so binary. The biggest pet peeve, this is the honest answer, the thing that bugs me the most is that we have too much information and advice being shared by people that have not actually done it. That's my biggest bugbear. Because if you've done it, right, I've been in business and sold business, and I live a very privileged life as a result. I don't go around telling everyone to start a business. You will never see me do that. I'm like, starting a business is reserved for an exceptional number of people. That's it. It is not the world that suits most people. It is torture most of the time. Your listeners will agree with me. Your 0 to 1 is not fun in any way, shape, or the form. And actually, growth just comes with bigger headaches and more fires. But it does suit a certain type of person, which is why you find people are entrepreneurial and they just fit that world. But I don't go around sharing it, everyone should do it. But yet you do find big names that do this ever so oddly. They've been successful and they go, do you know what I'm going to do now? I'm going to build up a big following and I'm going to tell everyone that your problems are solved by starting a business. And I just think it's just an example of how ridiculous it's getting of people that have not done it, but they can build up a profile, in air quotes again if you're only listening, and then suddenly you're believed and they start dishing out all this advice. That to me is the biggest pet peeve, because I've built businesses in specialist sectors, so I don't really care what anyone else had to say. I'll always say it to them, like, I didn't care what, frankly, anyone said. It was like, I was building business in the specialist areas, I wanted to get to know my market really well, and I had to understand business fundamentals. That took me 95% of the way there. I don't care what the latest guru said on LinkedIn about sales. I just don't. You know, I don't need to listen to him because he's probably not sold like he's claiming to have sold. So again, I just think my biggest bugbear is too many people saying things they've never done. So that's why I'm suggesting to all the audience, please vet where you're listening to and always ask, what's the ulterior motive? Samuel's not paid me 5 million euros to be on this call. I'd love to be it, but he hasn't. My ulterior motive is very little apart from having a good chat. Maybe one of your guys, one of your clients, one of your prospects will go, like, that was really helpful. You stopped me. Great. Like that's my box tick. I feel good about myself today. I'm go on and do whatever else I choose to do today. But there are many people where you go, well, it's because he's got a course, or he's got a book, or he's got a book and a course, or he's got.
Yeah.
It's like, come on, think about the ulterior motive about what they've, what someone's trying to dish out to you. But that's my biggest one. What about you? I'll flip the question back at you, Samuel, to end. What's your biggest bugbear that you've seen in the game?
Um, do you know in business, right? There seems to be this thing about everything being convenient and easily offending people. For example, eh, if I was to post something like there's no such thing as work-life balance,
Hmm.
people seem to get offended by that, right? And for me, if you're going to go into business, you're going to make sacrifices. If you're going to go into business, it's not going to be convenient.
Hmm.
If you're going to go into business, a lot of people tend to look at the end goal, having the cars, the mansion, but the process itself is a very, very difficult process, right? And I feel that a lot of people go into business only to be employees in their business. If you actually want a very successful work, it's going to require sacrifice. It's going to require hard work. And I think that when these truths are communicated somewhat, like people tend to get offended by it. But it's hard work.
But I think it's true, Samuel. But I believe that's because it comes down to like emotion and ego. A lot of business owners don't want to be rational and factual. They prefer to be emotional and egotistical, which is, I prefer to believe that the world is easy and simple rather than you saying, Samuel, this is going to be one heck of a slog, and me going, oh, I don't really like the idea of that. Yeah, there's something about really successful business owners that they are highly rational and very open to receiving, like, for example, constructive feedback. You get that being in this game, learning you're rarely right. You're often wrong. It's a weird. Do you really want to spend your whole life just being wrong 80% of the time in the business? Because that's actually normally the game of business. Even when you've been successful, I have multiple failures under my belt
Yeah,
as well from learning everything and still getting it wrong. Yeah, it's a weird and tremendously tricky journey. But yeah, I agree with you. Yeah,
yeah.
fully.
So I'd probably say that's my pet peeve. So
Nice.
for yourself, what does the next 5 years look like? Next 10 years look like?
Yeah, I think I put a LinkedIn post today saying I normally work my life in sprints of 4 years. Like I just did it more accidental and it changes. But I think the next term above all, is being an active family man. So that's the most important thing. I want to still be part of my kids' life, go on lots of holidays, enjoy my life with them. That's definitely something. Potentially move country. That's actually on the target as well. I don't know whether I'll stay here in Hungary now, whether we move to a different countries. That's up there. From a work perspective, I guess the right way to do it is I'm building a portfolio of advisory clients. I don't want to build another business again. It doesn't make sense, and I've done the acquisitions as well. So that I may as well be leveraged now and then get myself in with other business owners. I like being busy. I still like the challenge of business, but in turn, I'm done with the going from zero world. Like I'm not going to be doing that again. That's a fact. So yeah, I'm building it up. I do it through upper market, which is effectively the specialist play. That is strategically what I've done. So I effectively practice. I preach now what I've practiced and succeeded with, which is go more specialist, find the top of your market, grow from there, and be happy with that business. Don't go and get lost in the world of trying to grow, £500 million worth businesses because most people don't even want that. It's funny how so few truly actually want and need that. So yeah, I'm effectively trying to build up a portfolio from there. That's probably what I'll focus on over the next 5 years because I mean, most of them need those sort of time windows to be successful. After those 5 years, I actually just don't know. It's a weird, almost existential crisis I go through, thinking that when I'm 50, what am I actually going to be doing? Because I don't now. I'm fundamentally free, and I don't like being free and life being comfortable. So yeah, in 5, 10 years, Samuel, I really hope I've worked out what's coming next. But maybe when the kids are older, it'll be different because my wife and I may choose to do things ourselves. We're very charitable. Like we do a lot, I would say. Like obviously I do it under, there's no need for me to brag about it, but there's a lot of charity we do and we do a lot of good things with the money that I have and, what we have as a family. So I think that's probably where in 10 years, I'll probably end my last third of life just giving back, doing loads of charitable projects because the kids will be older and probably not want to spend any time with me. But then, so you know what it's like, mate. They get older and they just don't, I don't think they seem to want to be around you as much.
No,
So
no. I think I'm
maybe
getting
I'll
to
make
that
the
age
most of it.
soon. My kids are getting to that age soon. You know, daddy going about is kind of embarrassing them, so they kind of say, "Dad, stay away."
Yeah,
Um,
yeah, yeah.
but honestly, it's a lovely to see them grow. And any last message for our audience?
I think I've shared enough. I'm again, my last message to the audience is if there's anything in its vibe, do you want to have a chat? Don't be afraid to reach out. Please make sure you're reaching out on the basis of knowing yourself, Samuel, or the pod at least, because unfortunately I do get a lot of spam, or I get a lot of people asking for free time, and I don't mind giving back if it's somebody qualified enough that actually wants to listen and doesn't mind. You said at the beginning, like honesty and almost brutality in the approach of you're doing things wrong, do this and get it right. But I'm more than happy to help your audience, clients, and the like, in any way I can.
Fantastic. All right, guys. Once again, just want to appreciate you guys for listening to another episode of Finance for Founders. I hope you really enjoyed this session. Please ensure that you like and subscribe and you follow us on all our social media platforms. We promise to continue to bring you the best raw content from entrepreneurs that have actually done it, walked in it, and stepped in it. And so they will be sharing with you the lessons that they've learned along the way. So, Aston, once more, want to appreciate you for the time that you've
Thank you.
given us today. Really, really want to thank you for your time and certainly wish you all the best. You'll be hearing from me anyway, but certainly want to wish you all the best in the
Sure.
future. You know?
Thank you, and likewise, Samuel. Appreciate it, mate.
Thanks. All right, guys. See you soon. Take care.